Shares of NVIDIA falling one day after the company announced a $100 billion investment in OpenAI to build data centers using NVIDIA's chips. Our next guest says NVIDIA's cash infusion into one of the biggest customers, its biggest customers, is a worrying sign. Joining us now, Tom Hancock, portfolio manager of the GMO U.S. Quality ETF. Tom, great to have you with us.
Hi, great to have me.
Why is this so concerning? I mean, isn't this a form of vendor financing, if you will, and that's existed for ages? Why could this signal a top or a bubble?
Yeah, well, I think vendor financing has a pretty spotty history, frankly. It's been a feature of past bubbles that we've seen. So NVIDIA is basically giving $100 million here. $35 million will go back, it's called rough numbers, into NVIDIA's revenue down the road. It'll look like revenue for NVIDIA, but it's not real cash they're getting. They're losing on the deal. And NVIDIA is also guaranteed, underwritten some of CoreWeave's investment, too. So this is not to say it's a bubble or there's anything fraudulent here, but it's the kind of behavior that just demonstrates how much capital intensity there is in building out this AI infrastructure at a time where the monetization outside, some of the in-house applications of, say, a Meta or an Alphabet, and an environment where the monetization is very unclear at the scale companies have to invest in it.
Though its 1.48% decline soon after the opening raises valuation concerns across the tech industry, NVIDIA's $100 billion OpenAI agreement bolsters AI optimism. Following record highs, the Nasdaq 100 remains stable to decline. Traders wonder if the benefits of AI outweigh the inflated market prices. Vanguard cautions that in the absence of improving underlying fundamentals, AI and rate cuts could not be sufficient to support market highs. Following its announcement that it would invest up to $100 billion in OpenAI to construct cutting-edge data centers driven by its AI chips, NVIDIA saw a nearly 4% increase in stock price on Monday. The agreement represents a growing alliance between two of AI's most significant stakeholders and was signed just hours before OpenAI CEO Sam Altman revealed new infrastructure plans. The transaction would require 4 to 5 million GPUs, double current output, according to NVIDIA CEO Jensen Huang. After the announcement, NVIDIA's market value increased by $170 billion, approaching $4.5 trillion. NVIDIA fell about 1.48% in Tuesday's early trading despite the optimistic reaction, indicating that traders might be wondering if the upside is fully priced in. NVIDIA's stance is made more problematic by the fact that Microsoft, Oracle, and SoftBank are still involved in OpenAI's wider rollout under the Stargate effort. Joe Davis, chief economist at Vanguard, cautioned that although the Fed's recent rate decrease and artificial intelligence are helping markets, the underlying fundamentals are only okay. According to Davis, any missed earnings or unexpected inflation could reveal weaknesses as the S&P 500 and Nasdaq reach new highs. Along with other mega-cap tech companies, NVIDIA's valuation gives little margin for error. The Federal Reserve's favorite inflation indicator, the core PCE price index for Friday, is the next important piece of data. While a hot reading would compel investors to reconsider their bullish stance, a cooler print might support expectations for additional rate cuts. As traders seek evidence that NVIDIA's AI catalyst might result in wider earnings growth, stocks may continue to consolidate close to highs. The PCE reading on Friday is crucial. A low value might give tech new life. However, since the major indices are priced for perfection, any indication of poor earnings or data might cause steep declines. Keep an eye on NVIDIA's support around $174 and upward pressure toward $185 for short-term Nasdaq direction indicators. Over the last 5 years, NVIDIA's stock has dominated the market. The management team of the corporation anticipates that AI spending will soar in the years to come. NVIDIA is well positioned to gain since it is a market leader in data center GPUs. NVIDIA is the only company that has embodied the continuous explosion of artificial intelligence, AI. With its potent graphics processing units, GPUs driving AI training and inference, it is the top infrastructure supplier. The demand for the company has been phenomenal. Consequently, NVIDIA's stock has soared, rising 1,340% in the last 5 years alone. Even with that kind of gain, it's wise to maintain your bullish attitude. Consider purchasing this AI stock before the end of 2025 for the following reason. Hundreds of billions of dollars have been spent this year alone by IT corporations to expand their artificial intelligence capabilities. The source of that is even more extensive. During the most recent earnings call, NVIDIA's CFO, Colette Kress, stated that the company's management team anticipates investing between $3 trillion and $4 trillion on AI by the end of the decade. This is an absolutely enormous amount. At $3.5 trillion in the middle, it accounts for 3.2% of the $111 trillion world GDP in 2024. When it comes to data center GPUs, NVIDIA is the market leader. It will benefit greatly from all of the upcoming spending, which will keep raising earnings and revenue. Large investments will be made since no company wants to fall behind in the AI race, even though there may be some cyclicality over any shorter time due to potential macro headwinds. That is the main justification for giving purchasing NVIDIA stock significant thought before 2025 ends. NVIDIA's hegemonic market share might eventually be challenged by Groq's language processing units, LPUs. NVIDIA is in the best position to benefit from the enormous demand for AI chips, as seen by the company's recent price. Chip startup Groq's most recent fundraising round has the stock market giddy. Announcing that it had raised $750 million, the privately owned company's valuation more than doubled to $6.9 billion. There are some notable distinctions between the chips produced by the largest chip maker, NVIDIA, and those created by Groq. Unlike NVIDIA chips, which are made for both training and inference, its chips are made just for inference. Compared to NVIDIA's graphics processing units, GPUs, Groq's LPUs are more basic and can run AI models to translate text, respond to queries, or operate bots more quickly and efficiently. Given that NVIDIA's GPUs may cost tens of thousands of dollars each, that is an alluring offer. Although Groq is essentially a possible rival of NVIDIA, the massive firm, which is valued at over $4 trillion, benefits from the smaller company's recent valuation. Why does Groq's positive news benefit NVIDIA as well? Let's examine. Jonathan Ross, the CEO of Groq and the creator of the Tensor Processing Unit AI Accelerator, was one of several former Google engineers that started the company in 2016. Although the business began poorly, and as Ross admits, almost went out of business, it gained fresh momentum after OpenAI's ChatGPT platform was introduced in late 2022. Currently, the firm provides Groq Cloud, a cloud-based solution that enables users to work with its LPUs, and Groq Rack Cluster, an on-site solution for clients managing their own data centers. According to Groq, the Groq Cloud platform is presently being used by over 1 million developers. When the two massive chip firms, NVIDIA and Intel, unexpectedly announced a partnership, it was a historic moment. In addition to developing data center and PC technologies that officials say would usher in the next era of computing, NVIDIA will spend $5 billion in Intel stock. However, the comments made by NVIDIA CEO Jensen Huang and Intel CEO Lip-Bu Tan regarding the collaboration may have piqued the curiosity of many investors more than the details of the transaction. With NVIDIA's stock rising 1,272% over the last 5 years, and its GPUs enabling artificial intelligence as we know it today, Huang is regarded as one of the best executives in the industry. In a last-ditch effort to save the company, Tan replaced Intel legend Pat Gelsinger, who is new to the position. In the same time frame, Intel's stock has dropped by almost 41%. Just days after President Donald Trump declared that the U.S. government will acquire stock in Intel, Tan views this announcement with NVIDIA as a huge victory. The well-respected Huang's endorsement of Tan's turnaround skills is also a significant vote of confidence. Tan acknowledged this and remarked, "I want to thank Jensen for believing in me. After then, Intel and our staff will put in a lot of effort to ensure that you receive a favorable return." Additionally, Tan revealed that the agreement was revealed 6 months after he made his chief executive debut. In addition, Huang expressed gratitude, pointing out that the two businesses had collaborated closely on the transaction for over a year. "I'm thrilled to be a part of this wonderful, historic collaboration with Lip-Bu Tan, a longtime friend and many of my Intel colleagues." What follows then? Most people who are optimistic about Intel think that Huang's boost and the money from the Trump administration would enable the company to overcome its current setback and emerge stronger. One of Intel's primary objectives is to stabilize and make money from its foundry business. However, it seems that NVIDIA will not be becoming a foundry customer of Intel, at least not for the time being. According to Huang, we have always assessed Intel's foundry technology and will do so in the future. However, these bespoke CPUs are the main emphasis of today's announcement. Even while bulls may not be achieving all of their goals, the encouraging news has caused INTC stock to rise 16% in the past month. Additionally, Lip Bu Tan had an incredible first half of the year, possibly ushering in a new era of leadership for the once famous chipmaker. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
You really get an analysis of the insatiable demand of investors into the AI data center story. But are they starting to question, ultimately, whether we can meet that insatiable demand, whether funding is there in the longer term?
No, I think it's quite the opposite. Investor enthusiasm is only growing. If you look at one of our ETFs, BAI, it's an actively managed AI ETF. It's brought in over $5 billion this year and is now the largest AI ETF in the United States. And a lot of the exposure that it is providing to investors is around that digital infrastructure layer, the hardware producers in the semiconductor space, the digital infrastructure owners, some of the data owners that are becoming really valuable in this explosion of AI models. And so there's a ton of investor enthusiasm. And I think there's a lot of expectations that revenues will match the expenditures, if not exceed them in the next several years.
But how much should we get comfortable with companies like NVIDIA basically plowing their own revenues of today into hopes of revenue of tomorrow, basically funding their end clients?
I think it's beyond comfort. This is a necessity for some of the leading technology companies. They have a tremendous moat because they have low cost of capital. They have tremendous access to dollars. And they're able to really kind of leverage their own strengths, which is if you look at a semiconductor company, owning GPUs, owning this manufacturing process is really valuable in the semiconductor space. That's the shortfall that's needed by large language model developers. So this investment across the industry makes a ton.
First off, do we have a sense of exactly mechanically how this is going to work? Is NVIDIA giving over time $100 billion in cash as an investment in OpenAI, and they'll come back and buy NVIDIA products? Is it going to be an investment in kind, in products, or do we not know yet?
I don't think we know anything yet. They said that the details will be worked out, I guess, published over the next few weeks. It sounds like, though, that the $100 billion, so we can tell, it looks like it's incremental as the capacity is built out. So the first $10 billion looks like it's going to come in the second half of next year as they ramp up Vera Rubin over to OpenAI. So I wouldn't anticipate that there's $100 billion like lump sum all at once. It looks like it'll come out over time, over some period of time as they build out up to what looks to be 10 gigawatts of capacity. The first gigawatt second half of next year.
And what is your key inference from this in the sense of what it means for size of the market, the pace of the build out, whether there's still scarcity, whether there's enough power to have this all happen?
Yeah, no, those are all great questions. I mean, look, as of right now, we clearly one of the primary overarching themes seems to be a shortage of compute. Everybody out there who's involved in this seems to still be scrambling for compute. And so I do think that is part of this. And, Jensen's thrown out some big numbers for what he thought infrastructure spending would be by the end of the decade. I think he said 3 to 4 trillion, like who knows? I don't know how big, but I do think that it's big. So you have that. I think the power question is very interesting. I think customers are lining up power in front of these kinds of investments on years in advance because the power infrastructure as it sits isn't there. That has to be put in front. And people have really thought about whether or not power might actually be like the primary constraint as we ramp all this up over time. It may not even be compute. Over time, I mean, look, OpenAI has very. We saw with Oracle and some others last week. OpenAI has some very robust goals for what they want to bring to the market, to the world of AI. There's a lot of infrastructure that needs to be put in place. And I guess they see this as one of the better ways to actually get that done. But I think still TBD on the mechanics and what this will look like as it ramps out presumably over the next several years.
Stacey, Jensen, during the John Ford interview, said that this is additive to anything that we've contracted already. And so do you read that as this is effectively a guidance raise?
Well, I mean, they haven't given specific guidance on revenues, and he's already given some very sizable numbers for infrastructure spend. But I mean, fine. Like if it makes it easier for me to believe a $3 trillion, infrastructure number, like I don't need it to be upside to that. Like if it makes that number more plausible, I think that's fine, frankly.
But, you mentioned that we're going to get a lot of the details in the coming days because it hasn't been finalized. But at the same time, how do you get excited? Do you think the market is right to boost the stock by about 4% when it's NVIDIA giving over money for them to buy chips? I mean, it seems like a shell game almost. Can you walk us through that logic?
You could argue it either way. So right now, again, the stock is up. And again, you can argue that at least I can chalk in numbers like revenue dollars that are clearly going to be there next year. And this has been the story on the AI space in general. I mean, for 2 or 3 years now, it's been number go up. And like number seems like it's still going up. At the same time, like I hear you, there's already been some worries about, if you want to call it like circular dynamics here, where NVIDIA or others are like funding customers who are using that money to buy parts and to buy infrastructure. And certainly we've seen sort of things like that on a much smaller scale. This is bigger. And I mean, it will clearly like start to raise some questions, especially as this goes. But at least in the very near term, at least today, like the number go up thesis seems to be carrying at least today.